Hello traders, welcome to Dux Forex. In this video, we're going to break down everything a beginner needs to know about Forex trading in 2025. Whether you're brand new or you've dabbled before, this is going to walk you through the most important things in a way that's simple, natural, and straight to the point. First, let's quickly understand what Forex trading even is. Forex stands for foreign exchange, and it's the process of buying one currency and selling another. For example, when you trade EUR/USD, you're betting on the value of the euro going up or down against the US dollar. The Forex market is the largest financial market in the world, with over $6 trillion traded daily. It's open 24 hours a day, 5 days a week, and includes currencies from all around the globe. Now, before we get into strategies or platforms, you need to understand how currency pairs work. Every pair consists of a base currency and a quote currency. If EUR/USD is trading at 1,000, it means 1 euro equals 1.1 US dollars. If you think the euro will rise, you buy. If you think it will fall, you sell. It's that simple in theory, but real-world trading comes with many layers. Next, you'll want to understand what affects currency prices. This includes economic news like inflation, interest rates, and employment numbers. It also includes technical elements like chart patterns, trends, and indicators. For beginners, I recommend learning both fundamental and technical analysis slowly rather than jumping straight into charts. Speaking of charts, most traders use platforms like MetaTrader 4 or MetaTrader 5. These platforms let you analyze charts, place trades, and run tools called indicators or expert advisors, EAs. MT4 is the most common one for beginners and still holds up well in 2025. Once you install it, practice on a demo account. Do not trade real money until you've spent at least a few weeks practicing and understanding how things work. Now, let's talk about leverage. This is where many beginners get wrecked. Leverage lets you control a larger position with a smaller amount of money, but it also means your losses are magnified. A small mistake with high leverage can blow your account fast. In the beginning, stick with low leverage, maybe 1 to 10 or 1 to 20, until you really understand how to manage risk. Risk management is everything in this game. You never want to risk more than 1 to 2% of your account on a single trade. Even a good strategy will have losses, so protecting your capital is key. Set stop losses, use proper lot sizes, and never let emotions override your plan. Let's talk about strategies. There are thousands of strategies out there, like scalping, swing trading, trend following, and more. For beginners, swing trading is usually the easiest to start with because it doesn't require you to sit at your computer all day. Pick one strategy and stick with it. Don't jump from method to method every week. That's how most people fail. Another important point to consider is understanding trading sessions. The Forex market is open 24 hours a day, but not all hours are equally active. The major sessions include the London session, New York session, and the Asian session. Each has its own personality. London tends to be volatile. New York overlaps with London and brings high volume. And the Asian session is usually slower. Knowing when to trade based on your strategy and goals can make a big difference. Then we have the psychology side of trading, which many beginners ignore. It's not just about charts and signals, it's about managing emotions. Greed, fear, and overconfidence are what often lead traders to blow their accounts. Having a system you trust and sticking to your rules is more important than finding the perfect indicator. Confidence comes from consistency, and consistency comes from discipline. You should also learn how to use economic news to your advantage. Tools like the economic calendar show major events like interest rate decisions, employment data, inflation reports, all of which move the market. A beginner mistake is trading blindly into high-impact news without knowing the risk. You don't need to be an economist, but knowing when these reports happen and what they mean can help you make better trades or avoid bad ones. Finally, always treat trading like a business. You should have a plan, a routine, and a journal where you track all your trades. It doesn't have to be fancy, even a simple spreadsheet showing your entry, exit, lot size, and why you took the trade will teach you more than any YouTube video ever could. As a new trader, you should also be wary of information overload. With so many YouTube videos, forums, and paid courses out there, it's easy to get overwhelmed. Pick 1 or 2 reliable sources and stick with them. Focus on learning the basics well rather than trying to learn everything at once. The deeper your foundation, the easier the advanced stuff will be later. Another mistake beginners make is trying to trade too many pairs at once. Start with 1 or 2 major pairs like UR/USD or GBP/USD. These have high liquidity, low spreads, and lots of information available. Once you get consistent on 1 or 2 pairs, you can expand, but mastering a few is better than being average on many. Also, keep in mind the importance of patience. There will be days when nothing sets up and no trades happen. That's normal. Trading isn't about action, it's about precision. Sitting on your hands and doing nothing is a skill in itself. Many traders lose money simply because they feel like they have to trade every day. You don't. And lastly, don't get discouraged by losses. Every trader takes them, even the best. The goal isn't to avoid losses, it's to manage them. A good trader can lose 40% of the time and still be profitable. It's about how you handle the downtimes that will determine your long-term success. You should also be aware of trading costs. Spreads and commissions may seem small, but they can add up quickly if you're trading frequently. Look for a broker with tight spreads and low fees, especially when starting out. Keeping costs low is part of managing your edge in the market. Next, take advantage of technology. There are tools and platforms that can automate parts of your analysis or help you stay disciplined. Things like trade alerts, trading journals, and backtesting software can save time and improve your accuracy. Even something as simple as setting price alerts on your phone can help you stay ahead. Also, don't neglect the power of community. Joining a reliable trading group or Discord server can help you stay motivated and learn from others. Be careful though, not every community is helpful. Look for groups that focus on real strategies, not just hype or signals with no context. Lastly, develop a growth mindset. Trading is a skill, and like any skill, it takes time to get good. You will make mistakes, and that's okay. Learn from them, adapt, and keep improving. The traders who stick with it and keep learning are the ones who succeed in the long run. So by now you should have a decent understanding of what Forex is, how the market works, and what you need to look out for. Don't rush into it. Take time to study, practice on demo, and develop habits that help you grow as a trader. Now, as a trader, you should have basic knowledge of trading before even considering trading. However, if you want a much easier solution, we provide high win rate trading signals. You can sign up and receive them daily. The hard work is done for you, you just follow along and learn as you go. If you found this video helpful, please give it a like, subscribe to the Dux Forex channel for more no-nonsense educational content and updates. Leave a comment if you have any questions, or let us know what topic you'd like us to cover next. Thanks for watching and good luck on your trading journey.